Yo, what is good, guys? Somewhat of a stagnant day in the market today, but I can promise you there is a lot more happening behind the scenes. So that's what we're going to be talking about in today's video. We're really going to be looking more outside of the technicals, rather into the options market, what the market makers are doing, and really what the market is preparing for, where the outflows and inflows are going and coming from. So I promise you this is information that is very valuable for the next few weeks, next few days. So this is a video you're going to want to stick around for, so with all that being said, let's hop into it. Make sure to show this video some love, give it a like and subscribe, and we're just going to get right into it. So, if you didn't notice, I got a new audio setup, so the volume and clarity should be much better now. For those of you who have really been requesting that, it's time that I give you that upgrade that you guys deserve. So, onto the chart here, I'm just going to point out that macro trend line is still very much in play here. Today, again, we're gonna, actually I think we'll start out with the technicals I was looking at yesterday for what I was expecting, and they went exactly how I was expecting, but I really want to point out how this trend line was interacted with today. You kind of like doinked it, I guess, really just kind of a quick hit. I shorted on this candle, and I am well aware that there is definitely a chance we can go into the high teens, but you're going to see where all of that, kind of like that thought process is coming from, and that's going to have a lot to do with data outside of the technicals. So we're going to get into that pretty soon, but first off, in yesterday's video, I said, I'll draw it out, this is the trend line that is very important to hold. And what did you do today? You hit it, as well as, I believe this is the, no, not that one, this one. So I'll just put it up. This is going to show you where all of the supply and demand zones were, really. And it was really, this was something you wanted to be aware of or paying attention to, and I'm going to show you more about the supply and demand zones, and you'll see. So, right here you can see this is really where there's no volume being traded, as well as you can look back here. I'll show you another one of those where it's much more obvious and clear what the effects of having those areas where no volume is traded. But for here, this is, the second you dip into this area, I would say probably like around here, you fall straight through. That happens every time. You go, I'm going to show you another example, but this is where you went right through it, and it was very important to hold that trend line here, which we bounced off of, which I said, if you hold this, it can possibly give you that opportunity to keep going higher. But right now, what you formed here is either a channel or a bear flag, and you went underneath it, but like in the last 2 minutes of the day, it shot right back up, back into this channel, however this is drawn, but you get the point of what I'm trying to point out here. So this is definitely something you're gonna want to be aware of, just how it trades within this area, and that macro trend line still in play. So I also just want to zoom out quick and show you what else is right here, and like kind of like what happened today. You got rejected right where these two lines intersect, and this horizontal line, this is what I really kind of want to show you the importance of this volume. I believe it's this one. So yes, it's this one. So I'm going to point out two things here. First off, this volume gap. What happens when you go inside of this? You either go straight through it, or you get rejected off it and you hold above it. So just look for yourself. What did you do? You went into this and you just went through it with literally without stopping. And how many times have you done that? Every single time you're in this area, except for here. But you can see it either goes up or right through it in both directions. So you're at a very tight spot where you're right above this, underneath a huge supply zone. Really the peak of the supply zone from, depending on where you draw this from, it varies how it looks, because you'll see how it changes around. So anyways, right here you're at a very strong supply zone, and this is where you're seeing a lot of selling pressure really hitting the markets because it's really hard to get above this area. And the confidence of the market, it's very shaky right now. There's just kind of like a lot of speculation that can this go higher or is this the top? And where did you get rejected? Right at that intersection where that peak in the supply zone is, as well as that macro trend line. Right at it, like almost down to the minutes here, or the hours. So that's something interesting to note, but now I really want to show you this data that we're going to look at. I'm going to explain this a little. This has a lot to do with kind of like what market makers are doing, but this is where I want to start. So yesterday, remember, or maybe the video before that, I pointed out retail has been the major driver of this entire melt up, this squeeze that I've been waiting for quite a while now, and we finally got it. And I've tended to be a little early onto the big moves, which something I can adjust to over the weeks and the months. But I was waiting for that huge squeeze for a while, and we got that. And this is a historical squeeze that we're in, and a big driver of this has been retail. But now, what you're getting is insiders dumping all of their shares, and where you can see that is right here. So this line right here is like the average of like the buying and selling with the shares that the companies are doing. And right now, this does a really good job of kind of forecasting the future direction. Not always, but it does give you a good idea of the general direction here. In January, you can see they were selling like crazy right at that peak, and what did you do? You dropped really hard. Here, same thing. You are now at the same level as January, where these companies are just unloading all of their shares. So there's a lot of dumping going on from the insiders here. So that's it for that, and I want to show you some more data that's really coming from kind of like the bank's opinions, which I'm going to show you. So this is what the banks are thinking here, and they are not always right, but Goldman Sachs is turning bearish, and this is definitely zero hedge. This is definitely a very reliable source for data. I've been following them for months, and they really do provide valuable information, so I would recommend reading the stuff that they put out. But anyways, this is the stuff they're looking at. So we've been rallying without any fundamental reasons. Mostly, this is definitely more of a technical kind of rally, just squeezing, and not necessarily from fundamentals. So that is really the big thing they are talking about. But if you look at all of the kind of like the short positions here, it is at insane levels, and that's how we've been able to squeeze this hard. It's just because there's so much covering going on here. So this is really something to be aware of, how short the market is right now, because this is where all of this momentum is coming from. So it is a very tricky area here. I pointed out on the technicals. Well, we're gonna get back to that after I explain this. So the general idea of this, I can explain this in another video. It is somewhat on the complicated side, but if you want to read this, just the general idea of it, the GEX, when this is low volatility is high, and when it's high, volatility is low. And what you've been seeing now, this is the GEX line right here. What you've been seeing is this is going up and the volatility is slowing. The options market is stabilizing. And we're going to compare this to the past two peaks before we dropped really hard, and you're going to see some similarities. But the DIX here, when it's low, kind of, I guess, the sentiment and activity in the dark pools where the market makers are trading, and the institutions, the big money, that sentiment is much lower and more bearish. So now what we're going to do is compare this. This is something me and some of my friends in the Discord, which join the Discord. There is no reason why you shouldn't. There is a lot of stuff to learn in there. If you want to learn how to trade and make money, that's the place to go. But the big thing here is we're going to take a look at that March rally and what happened here. You saw the GEX just going up, and we were rallying with it while the DIX was going down. And while this is going down, the sentiment in the dark pools, what the smart money and the big money is doing, their sentiment and their thesis is bearish. And what happened here before you reached that peak? The GEX was going up and the DIX was going down. And what happened to SPY? It got destroyed here. Same thing here. A little different. It's hard to pick apart, but if you just kind of look at it, it will make sense. The spikes, and it usually correlates to a drop coming. So it lines up with a lot of things I've been saying. The VIX bottoming within the third week of August or September, and there's what's happening right now is market makers are preparing for a gigantic move here. You can see with insiders doing all of their selling, everything is stabilizing right now before a very, very big move. So that's the point I'm trying to stress here. The market is preparing for a big move. So back to the technicals, I'm going to explain a little more of the supply zones, supply and demand zones, to see what is going on in the psychological aspect of the markets right now. We're at a point of uncertainty where the bulls are kind of questioning the strength of this. So, I have my list of the stuff I want to look at, and right now, first off, I'm just going to put up the VIX quick so you can kind of see where we're at. We're at a very big support here, and I think we're going to be looking at a massive spike within the next few weeks. So my thesis, has been that I want this, expecting this drop soon, within the next few days, and it's hard to give those timelines, especially in this kind of environment where the market is just melting up, and that makes the market extremely hard to predict its day-to-day moves, because it kind of goes off the, it's much harder to read. It kind of goes against what you would normally expect from respecting and rejecting at specific trend lines. So that's it for the VIX. Back to SPY. This is what I want to show you happen today, so you can see how these supply and demand zones were interacted with, and take away something from it even. But we're going to zoom in really closely here, and we're going to put up this where it shows you, not that one, whoops. It shows you the volume, where the volume was traded most throughout the day. So I have no clue why it's not showing up, but okay, let me try it. Give me a second here. So session volume profile. So okay, so what you have here is where the volume is being concentrated during the day, and these red lines, this marks where the most, specifically the highest amount of volume was traded during the day. And what you can do, I'm just going to do this and I'm going to explain it, but POC, so this is the point of control, and what I'm going to do is extend these to the, extend them to the right. And what happens with these is these are areas that usually need to be tested as a zone of liquidity, to see how much liquidity is in these zones where the buyers and sellers are. And what we did today in the Discord, we caught the top of this off by 1 cent. So what I was looking at was this line right here. I was calling for, if you're in the Discord, you know what I'm talking about, but I was looking for that top at 414.62, and on this candle we went to 414.63. We dropped, and I said I didn't think that's the top, but not by much. And on this candle we went to 414.64. So 1 cent above, you got that big drop, and this was into a very big area. So join the Discord if you want to see this stuff. I'm telling you, this is the stuff we go over all day, and that's the place to go to learn. And we day trade penny stocks and their options, and you can see all this crazy technical analysis stuff that I do. So today, really, we were just testing liquidity in both directions, establishing supports, and really just stabilizing. And the market is preparing for a gigantic move. That's the big thing you need to know here. Market makers are positioning themselves for what should be a enormous drop, and you can see that in the options market, the options flow. millions, hundreds of millions of dollars are being loaded into Triple Q, SPY, XPX, millions, hundreds of millions, and it's mostly concentrated in September. September 16th is the specific strike date, so, or expiration. So I think it's going to be a very, very rough few weeks and months after, kind of like middle to late August, and that's coming up. So I will wait. I have no problem doing that. We're just going to have to see how it reacts with this macro trend line here. But I'm also going to show you kind of the velocity of these moves here that we've been seeing, and kind of how you'll see. So let me take this off so you can see the charts. Well, actually, I'm going to explain something quick. An area I think we need to test soon is 409, 410, 409. You can see this has not been tested much. We have not tested really the liquidity and what the buyers and sellers are going to do in this area. And you have a gap here, so this is a very relevant area, and if you move down, I think this is the zone you're going to be coming down to. That's going to have a lot to do with this trend line. So if you break this trend line, I think you're going to be testing liquidity in that area. So now what I was going to show you was the velocity of these moves we've been making and kind of what they have been reacting with as they've been doing this. So let me zoom back out a little. So these are Gann fans. This has to do a lot with the degrees of movement, the degrees of the movement in, whatever it's you're charting it on, and you are at the converging points on two different fans that have been drawn from higher highs and lower highs, or higher lows. So this is a converging point right here. You got rejected at it. This is a huge spot. You've just been sitting at all of these supply zones, rejections, macro trend lines, and it's crazy how we've really just been kind of like chilling out around here at these levels, back into this consolidation zone back here, 416 range. I've been watching 407 to 416, and went to 416.07 in pre-market. So there's just, the market is preparing for a big move, and you have a jobs report tomorrow morning, so you're gonna have to see how that goes, as well as CPI next week. I really think that's gonna be a massive driver of whatever is coming next in the markets. Now, it seems to be that inflation has been peaking, but from what I'm seeing in the options flow and like the options market, the market makers do not think so, and they know much more than we as retail do. So it's gonna be kind of a it's gonna be an interesting next 2 weeks, especially next week. So I've also been experimenting with the pulse zone theory, which I did put that up today, and I'm gonna show you that quick, which kind of like my forecast was. But anyways, and this is just me experimenting, so we're just gonna have to see how it goes, and this may look complicated. I'm gonna explain it, but anyways, I found it to be helpful for me to turn this upside down, just because it's easier. I've been doing it this way, just to the upside. So it'll make sense if you've been watching these previous videos, if you're in the Discord especially. You've seen how accurate this is. Plenty of times on the semiconductor ETFs we've been trading and swinging, but we're going to go in closer so you can see it better. So these thick white trend lines are the significant or signature resistance or supports, depending on if you're charting this to the upside or the downside. And then I've managed to be able to give it a grid, so I can give it phases, layers, and zones, so that I can give it coordinates. So for example, right here, join the Discord so you can see this explanation of this, but this would be I pulse P1 L2 Z2. So phase 1, layer 2, zone 2, and it would make a lot more sense if you see my explanations of this. But anyways, you break that signature resistance and you start moving up to that target. So here was your pulse zone right here, and you start moving up, and you have to respect these rates of velocity in order to get to that I guess forecasted or measured target where that target range and the next pulse zone is. So that would be up here. Now this is lining up for 411 for tomorrow, so this has a lot to do with this signature resistance, which we managed to get right back above barely. We barely got above this at the end of the day here, which you can see, but I think we need to get back above this rate right here. So you know, however you want to kind of like call that or chart that, I think we have to stay above this in order to get to 411 tomorrow, which we're going to see how this plays out. But you know, you can see how this plays out real time in the Discord, so I really do recommend you join that Discord because you have an enormous amount of information to access in there, and that's where I'm going to leave this video. So I showed you everything I want to show you. You know, I gave you all that important information, where this inflow and outflows are coming from, and we're just going to have to see how the next few days go. So yeah, that's where I'm going to leave it, so peace out, guys.